Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. The Cryptocurrency News EN channel does not recommend any offers to buy, sell, invest, etc. in the cryptocurrency market in any way, and any losses and other consequences are your responsibility. Our channel only follows the news of the cryptocurrency market and does not provide you with any advice on making transactions. Please enter into transactions in the market with your own analysis. Libra and Melania memecoins linked to same creators, Bubble Maps reports. Giasin mining executives face fraud charges, SEC case paused. Eliza Labs hack, Boyar's Bitcoin gains, and more. $102,000 BTC price short squeeze. Key Bitcoin trends to watch this week. Australian regulator AUSTRAC cracks down on crypto exchanges and remittance providers. Libra and Melania memecoins linked to same creators, Bubble Maps reports. Blockchain analytics firm Bubble Maps has uncovered compelling on-chain evidence suggesting that the same creators behind Melania memecoin also launched the controversial Libra token. Bubble Maps traces wallet links between Libra and Melania in a February 17 analysis. Bubble Maps pointed to a Solana wallet, labeled 0xCEA, as a key player in both token launches. The wallet sniped Melania Trump's memecoin at launch on January 19, making $2.4 million in profits before transferring the entire sum to another wallet on Avalanche. Multiple cross-chain transfers and transactions between Solana and Avalanche wallets revealed strong ties between the Melania and Libra launches. Just weeks later, the same 0xCEA wallet funded the creation of the Libra token and repeated the sniping strategy, netting $6 million in profits using wallets linked through Arbitrum and Avalanche protocols. Pattern of pump and dump activity exposed. Bubble Maps further noted that the 0xCEA wallet has been behind other pump and dump schemes, such as a fake Robinhood token, which peaked at a $120 million market cap before crashing to $12.5 million. Libra and Melania tokens crash within hours. The Libra memecoin, promoted by Argentine President Javier Milei, collapsed after insiders cashed out over $107 million, wiping 94% off its value within 4 hours. Similarly, the Melania token surged to a $13 billion market cap within 4 hours of launch on January 19 before plummeting 99% to $189 million. With on-chain evidence and repeated patterns exposed, will authorities investigate these high-profile memecoin collapses further? Giasin mining executives face fraud charges, SEC case paused. U.S. prosecutors have charged Giasin mining CEO Caleb Ward and former executives Jeremy and Jared McNutt with fraud, prompting the Securities and Exchange Commission, SEC, to pause its lawsuit against the crypto mining firm. Federal charges trigger SEC case freeze. In a February 14 filing, the SEC agreed to stay its April 2024 lawsuit following Ward and McNutt's court appearance. An FBI affidavit alleges the trio defrauded customers by misusing funds meant for Bitcoin mining rigs to finance lavish personal expenses, including luxury trips and watches. Ponzi scheme allegations surface. Prosecutors claim the executives ran a scheme where funds from new clients were used to pay returns to earlier investors, falsely portraying successful mining operations. They allegedly sent fake profit reports to clients and inflated equipment costs for additional gains. SEC investigates $5.6 million investor losses. Their SEC accuses Ward and Jeremy McNutt of defrauding 64 investors out of $5.6 million and selling unregistered securities. Despite Ward reporting McNutt for embezzlement, the SEC claims Ward concealed his own misconduct. Impact of Trump administration's crypto policies. Ward and McNutt requested the case pause, citing potential shifts in SEC enforcement under President Trump's pro-crypto policies. Trump has pledged to ease regulatory actions and launched a crypto task force, raising questions about future enforcement priorities. As federal charges proceed, will the Trump administration's crypto-friendly stance influence the outcome of the Giason case? Eliza Labs hack, Boyar's Bitcoin gains, and more. In a whirlwind weekend for crypto markets, notable events unfolded from Eliza Labs' security breach to Boyar Interactive's bullish Bitcoin gains and a major USDC challenge from Coinbase. Eliza Labs founder's X account hacked. Eliza Labs founder Shor Walters confirmed that his X account was compromised over the weekend, with scam links being posted. Walters, who had two-factor authentication enabled, expressed frustration over the targeted attack. Eliza Labs swiftly warned its followers against interacting with the fraudulent links. World ID Orb verifications launch in the Philippines. World ID, part of the WorldCoin ecosystem, announced the rollout of its Orb verification service in the Philippines, targeting Manila and Bulacan. The initiative aims to leverage the country's tech-savvy population, where AI adoption among knowledge workers has reached 86%. Boyar Interactive projects massive profit surge from Bitcoin holdings. Hong Kong-listed Boyar Interactive expects a 640% to 680% surge in 2024 net profit, driven by gains from its 3,183 BTC holdings. With a current value of $306 million, Boyar is Asia's largest corporate Bitcoin holder, ahead of Japan's Metaplanet. Coinbase sets sights on Tether's dominance. Coinbase CEO Brian Armstrong declared a bold goal to make USDC the leading stablecoin, challenging Tether's 61% market share. Despite USDC's current 24% share, Armstrong believes crypto could account for 10% of global GDP by 2030. Other headlines. Prominent analyst Plan B disclosed transferring his Bitcoin to ETFs for security reasons. Argentine President Javier Milei faces fraud allegations following the collapse of the Libra token, which he endorsed. Will Boyar Interactive's Bitcoin-driven growth spark further corporate BTC adoption in Asia? $102K BTC price short squeeze. Key Bitcoin trends to watch this week. Bitcoin, BTC, continues to test trader patience as it remains range-bound below $100,000, with market participants eyeing a potential short squeeze. Here's what's driving BTC price action this week. Short squeeze potential. As BTC consolidates, Bitcoin's price remains stuck within a tight range, fueling speculation of a short squeeze. Analysts are divided on direction. Trader CRYP Nuevo warns of a possible dip to $88,000, while the Kingfisher expects a short squeeze, highlighting liquidity clusters above $96,000. Meanwhile, trader CJ targets $102,500 as a key resistance, with a potential wick up to $105,000. U.S. Fed minutes and jobless claims in focus. Macroeconomic data could shake up markets. Jobless claims and Federal Reserve meeting minutes are due, with the Fed's hawkish stance dampening rate cut expectations. CME's FedWatch tool puts the odds of a March rate cut at only 2.5%, keeping markets on edge. Bitcoin exchange flows signal bearish phase. CryptoQuant's inter-exchange flow pulse, IFP, indicates a shift to a bearish phase as BTC flows from derivatives to spot exchanges, often a sign of declining market risk appetite. Investor demand remains strong despite range-bound trading. Despite flat price action, CryptoQuant's inflow-outflow ratio suggests ongoing accumulation, marking the first high-demand period since late 2022. Profit metrics approach, euphoria levels. Glassnode's NUPL metric for long-term holders remains above the 0.75 euphoria line, reminiscent of past cycle tops, though prior cycles show euphoria lasting several months. With liquidity clusters, bearish signals, and strong demand colliding, will Bitcoin break $102,000, or is a deeper correction ahead? Australian regulator AUSTRAC cracks down on crypto exchanges and remittance providers. The Australian Transaction Reports and Analysis Centre, AUSTRAC, has launched a major enforcement drive, targeting crypto exchanges and remittance providers over anti-money laundering, AML, compliance concerns. This regulatory sweep has resulted in the cancellation of 6 registrations and warnings to over 50 additional firms. AUSTRAC targets compliance violators. In a statement on February 17, AUSTRAC CEO Brendan Thomas disclosed that 6 remittance providers had their registration renewals denied due to serious offences involving key personnel. Additionally, 2 providers received conditional registration notices, with potential suspension for further non-compliance. 3 providers who failed to meet regulatory standards ceased operations altogether. Crypto exchanges under scrutiny. More than 50 crypto exchanges and remittance services received compliance alerts amid concerns about inadequate reporting of suspicious transactions. This follows AUSTRAC's 2024 investigation, which uncovered widespread underreporting in the digital currency and remittance sectors. Among the exchanges affected, collapsed firms FTX Express and Zipmex Australia were removed from Australia's digital currency exchange register following insolvency proceedings. Australia's growing crypto ecosystem faces tighter oversight with 417 digital currency exchanges and over 5,100 registered remittance providers. Australia ranks as the 3rd largest hub for Bitcoin and crypto ATMs globally, hosting more than 1,450 machines, according to Coin ATM Radar. AUSTRAC has proposed stricter AML and counterterrorism financing (CTF) laws, aiming for heightened crypto sector oversight. Additionally, the Australian Securities and Investment Commission (ASIC) introduced a consultation paper advocating that many digital assets be classified as financial products, requiring licensing for firms operating in the sector. As AUSTRAC intensifies its crackdown, will these regulatory measures reshape Australia's digital asset landscape or drive providers offshore to less regulated markets?